Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DALIPAL HLDG interim report. DALIPAL Holdings Limited offers a diverse range of businesses and services, including supplying application equipment for energy development, developing, manufacturing, and selling oil and gas pipes, producing new energy and special steel pipes, offering other products related to the energy sector. The significant increase in DALIPAL HLDG's stock price over the past year can be attributed to several key announcements and financial improvements. The most substantial news event was the Memorandum of Cooperation for a major project in Saudi Arabia, which involves an investment of US $600 million and is expected to produce 1.1 million tons per year. Additionally, the company reported improved interim financial results with a reduced loss per share, considered an interim dividend, and obtained new patents. These developments have likely fueled investor confidence, contributing to the stock's significant appreciation, which exceeded both the Hong Kong energy services industry and the broader Hong Kong market returns over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the company's leverage of R&D strengths, sales of unique leading products, optimized product structure towards high value-added segments, key breakthroughs in product development, and increase in sales volume for specific product lines. Domestic sales also contributed to a 20.2% revenue increase due to competitive advantages in sales and services. On the other hand, revenue decline is primarily attributed to overseas sales, which decreased by 30% due to geopolitical tensions, economic policy shifts, and regional volatility in energy exploration investments. This decline was accompanied by decreases in selling expenses and administrative expenses. Net income and profit margins. A shift towards recovery. The net income of the company initially took a hit due to price wars and fluctuations in raw material costs, leading to a decrease. However, the situation improved as the net income increased by RMB 28.2 million from RMB 100 and 24.5 million to RMB 100 and 52.7 million. Profit margins also underwent a transformation. Initially, they remained relatively low at 3.2%. Nevertheless, there was an improvement in gross profit margin, rising from 8.1% in 2024 to 9% in 2025. This uptick suggests that the company's operational efficiency and pricing strategies have started to yield positive results, contributing to a shift towards recovery. The company's financial performance indicates a positive trend in its operating cash flow. The net cash generated from operating activities for the year 2025 is RMB 154,844, demonstrating a significant increase in liquidity. Furthermore, the operating cash flow from trade and bills receivables amounts to RMB 358,542,000, underscoring the company's ability to manage its working capital effectively. These figures collectively suggest that the company is generating positive operating cash flow, indicating financial stability and growth potential. The company's debt level has undergone significant changes in recent years. Notably, long-term borrowings have increased by a substantial 99%, while interest-bearing borrowings have also seen an increase from RMB 1,212.6 million to RMB 1,522.9 million. Conversely, short-term borrowings have decreased from RMB 1,515.8 million to RMB 1,127.3 million. In terms of interest expenses, the company has experienced a slight change. Interest paid increased from RMB 39,825,000 in 2024 to RMB 49,589,000 in 2025, while interest expenses on borrowings remained relatively stable at RMB 39,574 and RMB 39,835 respectively for both years. The company's financial performance reveals a mixed picture across various regions and segments. The Dammam Basin in Saudi Arabia, the Middle East, and Southeast Asia were standout performers, indicating strong demand for their products in these markets. In contrast, international markets are expected to face challenges, which may impact overall growth. Within specific segments, new energy pipes and special products saw significant revenue and gross profit increases, while oil and seamless steel pipes also experienced growth. However, other products failed to generate any revenue, highlighting areas that require improvement. Overall, the company's performance is characterized by pockets of strength in certain regions and segments, but also some challenges that need to be addressed. Management is emphasizing the importance of balancing technological advancements with cost control in order to maintain industry competitiveness and comply with environmental regulations. The company's strategy focuses on three core strengths: technology research and development, industrial chain layout, and internationalization foundation. Domestically, sales have increased by 20.2% due to strong competitive advantages in sales and services. However, overseas sales have declined by 30% due to external factors such as geopolitical tensions and economic policy shifts. To mitigate this decline, the company will continue to focus on increasing market penetration among major clients, both domestically and internationally. This strategic approach aims to drive growth while navigating a complex global business environment. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company paid dividends in 2025 and 2024, with the final dividend for the previous financial year being $0 per ordinary share. Additionally, the company has also been actively buying back shares, repurchasing 710,000 shares in 2025 and 2,728,000 shares in 2024. Concerns about inventory buildup and supply chain disruption are mounting. The company's inventory backlog has increased year-on-year, while raw materials, work in progress, and finished goods inventory levels have decreased. This suggests a mismatch between production and demand, potentially leading to overstocking. Furthermore, operating rates of small and medium-sized manufacturers remain low, indicating persistent supply chain disruptions. Geopolitical conflicts and volatile tariff policies also contribute to supply chain uncertainties, exacerbating the issue. That concludes the financial summary for DALIPAL HLDG. Feel free to comment below, and I will be happy to answer them when possible.